In this video, I'll analyze the Q1 FY26 result and Concall of Baazar Retail. So let's start with the company overview. So Baazar Retail is a value fashion retailer mainly present in the eastern part of the India like West Bengal, Assam, Odisha. So that is their geography. In terms of the average selling price ASP, Baazar Retail has a ASP of 300 rupees, around 300 rupees. And if we look at V2 Retail, V2 Retail also has a ASP of around 300 rupees. So the main PR of Baazar Retail is V2 Retail, because if we look at Zudio, Zudio has a ASP of 450 to 500 rupees. Okay, so Zudio is on a higher premium side. So the main PR of Baazar Retail is V2 Retail. So that is the company overview. So let's talk about the Q1 FY26 result. In terms of the revenue, in this quarter they grew their revenue by 37%, which could have been higher. Why? Mainly because of the shift in the timing of Eid, because in the last year Eid was in the month of April, whereas in this year Eid was in the month of March. So that is why the whole sales of Eid shifted from the Q1 to Q4 FY25. So that is the thing. That is why the revenue growth is was little bit lower. Okay, but obviously this is the thing we have to think that it is a seasonal thing, not a business related thing. But if we look at their past 6 months, I mean past 2 quarter, if we calculate last 2 quarters result, then the revenue grew at a pace of over 40%, around 40-45% against the last year's Q4 FY24 and Q1 FY25. Okay, so that is the thing. So if we look at their growth has been there, but if we compare it to V2 Retail, obviously V2 Retail is like going in the another zone. I mean, so if we look at Baazar Retail standalone, okay, then I could say that the pace of sales growth has been there. Okay, we can't say that they are not growing at a good pace. 30-40% growth is a good growth. Okay, so that is the thing I would like to say. But if we compare it to V2 Retail, obviously V2 Retail is a clear winner. So that is the thing. In terms of their guidance, they have been guiding us for a 25-30% of growth for last few quarters, and always they give their guidance conservatively, and then obviously they outperform their guidance, uh, similar to the V2 Retail. Okay, so that is the thing. But I would say that 30-40% growth is a good growth. Okay, so that is the thing with the revenue growth. In terms of the SSSG, in this quarter SSG was -3%, obviously because of the timing of the Eid. That is why the triple SG was in the negative territory. But if we look at the normalized SSG, I think normalized SSG means Q4 FY25 plus Q1 FY26 SSG. I think I am not sure about that, but I think that is the thing. So if we look at the normalized SSG, then it is at a level of 11%, which is a good kind of a SSG, I would like to say. So in terms of the SSG, they are doing fairly well. Obviously, if we look at V2 is doing like next level. Okay, so that is the thing. And if we look at their guidance, they are also guiding us for a 7-8% SSG over next few years. So that is the thing with the SSG. In terms of the sales per square feet, in this quarter sales per square feet grew by 1%. Obviously, then if we look the similar reason, and the why the sales per square feet growth was a little low. obviously the shift in the timing of Eid. But if we look at their past performance, they have been growing their sales per square feet at a range of 10-15%. Okay, so they are growing at a fairly good pace, I would like to say. So that is the thing, and going forward also they would what they are guiding us, they are guiding us for a 10% year on year growth in terms of sales per square feet for over next 2 years. 10% is, I would say, that good amount of number. Okay, good amount of growth. So that is the thing with the sales per square feet. In terms of the store expansion, in this quarter, if we look at till now, they have around 232 stores over across India. I mean, not across India, but they are mainly present in the eastern part of the India. So in total, they have 232 stores as of Q1 FY26. In the last 1 year, they opened around 66 stores. So that is the thing. The growth in the expansion has been there, and they are guiding us for a 30 to 40 store per 40 to 50 stores in the FY26. Okay, and the main focus will be in the state of UP and Jharkhand. Okay, going forward they will more focus in the state of UP and Jharkhand. As of now, they have most of the stores in the state of West Bengal, then Assam, then Odisha. That is the thing. So yeah, they will go further to the western part of India, like UP and Jharkhand is more in the west, or against if we look at West Bengal and Assam. So that is the thing they are doing. So I would say that if we look at V2 retail, okay, V2 retail is going to open 120 stores in this year. So obviously the expansion of Baazar style retail looks little low. So that is the thing in terms of the store expansion plan. In terms of the gross margin, in this quarter they improved their gross margin by 300 bps, which is a very good kind of a improvement in terms of the gross margin. And if we look at their guidance, the management is saying that the management is saying that their gross margin is going to be in the range of 30 to 33%. Okay, and whatever benefit of cost they will get in the future, they will like to pass that on to the customers. Okay, so that they can retain more customers. So that is the thing the management is saying, that the gross margin will be in the range of 30 to 33% going forward. There is not going to be a big improvement. So fair enough thing, if they can pass those benefits to the customer, obviously the customer is going to get more value, and then obviously if the sales can improve by that strategy, no problem with that. So that is the thing with the gross margin. In terms of the EBITDA margin, if we look at pre-Ind AS level, they have been in the range of 6.5 to 7% over last few quarters. Like in the FY25, they reported a EBITDA margin of 7% in the pre-Ind AS level. And going forward, what they are guiding us for a 7 to 8% of margin in FY26. Then in FY27 they will improve it further to the level of 8 to 9%, then again 9 to 10%. The thing is that we have to look at their SSG number, that if they can keep their SSG number at a range of 10 to 15%, they might achieve that mark of 10%, 9 to 10% over next 3 years. So that is the thing we have to look at, but that is what the management is guiding us. So in terms of the guidance, is fairly good in terms of the EBITDA margin at a pre-Ind AS level, not the post-Ind AS level. So that is the thing. And if we look at their post-Ind AS guidance in this quarter, their EBITDA margin post-Ind AS was at the level of 15.5%, whereas they are giving a guidance of 14 to 15% in the year of FY26. So that is the guidance they are giving, but at a long term we can expect a good kind of a improvement in terms of the EBITDA margin at a pre-Ind AS level. So that is the point. In terms of the PAT, in this quarter they were PAT positive. In the last year's Q1 FY25, they were at a loss, okay, at a kind of a break even, I would like to say. They were in the Q1 FY25, whereas in this quarter they reported a PAT, which is a very good thing. And what the management is guiding us, the management is saying that they will do PAT positive in all the 4 quarters in FY26, whereas if we look at FY25, they reported loss in three quarters, okay, out of 4. So in terms of the guidance is very good, and I think they could absolutely achieve that thing. Why I am saying that? Because if we look at Durga Puja timing, Durga Puja in this year is starting in the month of September. So the sales of Durga Puja is going to shift in the Q2 also, and then obviously Q3 has its own festivals like Diwali, like weddings are there. So that is why I think in the next quarter Q2 FY26, they could achieve a PAT positive number because of the early Durga Puja. So that is the thing I would like to say about the PAT, and let's see what happens in the Q4. But I think for the next 2 quarters they should be PAT positive, okay. So that is the thing should happen. So that is the thing we have to look at. In terms of the PAT margin, in this quarter the PAT margin was in the level of 0.5%, whereas if we look at their guidance, they are guiding us for a 2 to 3% of PAT margin in a Ind AS level. So that is the thing we have to see, that how they achieve all the quarters PAT positive in all the quarters. So that is the thing we have to look at. So Q2 and Q3, I think they should do a PAT positive. So that is what we have to look at. So that is the thing with the result of Baazar Style Retail. And if we look at V2 and Baazar Style Retail, obviously V2 is the clear winner here, no doubt about that. In terms of growth, in terms of the efficiency, V2 has is excellent, because if we look at sales per square feet, V2 is touching a level of 1000, whereas if we look at Baazar Style Retail, they are still hovering around 650 to 700 level. So in terms of that, in terms of the efficiency, V2 Retail obviously looks a better company. In terms of growth also, obviously V2, and it is a correlated thing, because the efficiency and the growth, because if you can bring efficiency to your model, obviously your model is going to grow at a higher level, higher pace. So that is what I think. So there should not be any debate about Baazar Style Retail and V2 Retail. V2 Retail is moving in the another level. So that is the thing. So that's it for the video. Thanks for watching.